They say that during the gold rush, those who made the most money were the ones who sold shovels. Just like that, we might be looking for companies that are going to sell all electric vehicles. But have you thought about looking at companies who will be major suppliers of components to these EV manufacturers? Today, we are going to talk about a company that can be one of those shovels in a gold rush. You might not be familiar with the name, but trust me, this company is a game changer. This is none other than SONA COMSTAR. The company had IPO on June 14, 2021 for 291 rupees per equity share, and it got listed at 302.40 per equity share. And during the time of recording of this video, price is currently at 631 per share. And all this happened within 1 year of listing. Now let's get into the insights of the company. Sonacoms was originally incorporated as Sona Okegawa Precision Forging Limited at New Delhi in 1995. In 2013, the company changed its name to Sona BLW Precision Forging Limited with the aim of accessing global automotive markets. This company is a prominent automotive technology company in India for designing, manufacturing, and providing automotive systems and components like differential assemblies, gears, conventional and micro hybrid motors, BSC systems, and EV traction motors across all vehicle categories. The firm operates 9 production and assembly plants in India, China, Mexico, and United States. The firm has 6 production sites in India from where it supplies its product to worldwide markets. The company is also among the top 10 players globally for the supply of bevel gears to passenger vehicles, commercial vehicles, and tractors. Now let's talk about the pioneers of this business who built such a great company, that is, the management. Mr. Sanjay Kapoor is chairman of the company. He holds a bachelor's degree in science from the University of Buckingham. He has over 21 years of experience in the automotive industry, and prior to his appointment as the chairman, he served as the managing director on the board of Sona. Secondly, Mr. Vivek Vikram Singh is the MD and Group CEO. He joined the company in July 2016 and was appointed as the MD and Group CEO from July 2019. He holds a bachelor's degree in technology from HBTI Kanpur and a postgraduate diploma in management from Indian Institute of Management, Ahmedabad. He has over 15 years of experience and is in charge of monitoring the manufacture of auto components and system platforms in electric and hybrid cars. Capital allocation choices, external shareholder management, and so on are his other duties. Now, we will try to look at the key strength of the company. Number 1 is definitely the order book. As of March 2021, Sona has won 58 programs from 27 customers across product portfolios both from Indian as well as global OEMs, and the production is commencing this year. As on 30th June 2021, the net new order book stood at Rs 140 billion with 57% of orders coming from EVs. Sona has won 15 new EV programs from 10 customers, of which 47% are yet to commence production. The company has strong clients which are Ford, Jaguar Land Rover, Geely, Mahindra Electric, Volvo Cars, Tata Motors, Dana, Renault, Mahindra Mahindra, and so on. Number 2. Dominant market share and product positioning. Over the years, Sonacoms has strengthened its product positioning in the domestic and export market. It is among the top 10 suppliers in the differential bevel gear market and starter motor globally in the passenger vehicle segment in calendar year 2020. In global markets, Sonacoms hold 5% market share in differential bevel gears, 3% in starter motors, and 8.7% for battery electric vehicle differential assemblies in calendar year 2020. The company continues to gain global market share across its product line. Number 3. Manufacturing facilities and strong R&D focus. The company has set up 9 manufacturing and assembly facilities across India, USA, Mexico, and China. Out of these, 6 are located in India. Presence in India, Mexico, and China offers the company low production cost advantage. The company has strong focus on R&D. In fact, R&D expenditure constituted 3.3% and 5.8% of its sales in financial year 2020 and 2021. Now, we will try to understand the future growth prospect for the company. Number 1, decarbonization of automotive sector. The transportation industry currently accounts for 23% of worldwide energy-related greenhouse gas emissions. If current trend continues, emissions will be 20% more than they are now by 2030 and 50% higher by 2050. According to International Energy Agency, to lower the global temperature increase by 2 degrees Celsius, 20% of global road transport vehicles should be electrically driven by 2030. This is a major advantage for Sonacoms since it manufactures mainly OEM for the electric companies. Secondly, EV business is at tipping point. That is, EV market is set to become 5 times bigger in the next 5 years. In calendar year 2020 alone, the worldwide EV market reported sales of 2.3 million units, accounting for 3.3% of total global vehicle sales. Going forward, worldwide EV production volume is expected to increase more than 5-fold in the next 5 years, from 2.3 million units to 11.2 million units over calendar year 2020 to 2025. Launch of BLDC motors for Indian electric two-wheeler market, a new opportunity and horizon. In November 2020, the company launched and started commercial delivery of BLDC motors for Indian electric two-wheeler and electric three-wheelers. This made them the leading supplier in the Indian market alone. According to CRISIL, the electric two-wheeler market in India is anticipated to reach 2.1 million units by financial year 2026 due to decrease in battery prices and lower operating costs as compared to internal combustion cars. In sync with this, the Indian BLDC market for electric two-wheelers is expected to grow from 0.1 million units to 2.1 million units in volume and from 0.4 billion rupees to 4.2 billion rupees in value. Now, we will try to understand the key risks the company faces. Number 1 is the slowdown in automotive sector globally. Sona's business is dependent on the performance of the automobile industry in the United States, Europe, India, and China. Reduced demand in the market segments that Sona presently serves, as well as any unanticipated changes in the rules, customs, taxes can have a substantial negative impact on the company's operations and financial performance. The next key risk is foreign exchange fluctuation. That is, since the company generates 75% of its income outside of India, it is very vulnerable to currency fluctuations. Despite the fact that the firm hedges a large amount of its exposure, there is a risk that any adverse movement in the exchange rates will have an impact on financial performance. Also, high customer concentration act as another key risk. That is, the top 10 clients account for 79.6% of company's revenue in financial year 2021. Furthermore, the top 3 clients account for 45% of overall income in financial year 2021. As a result, the loss of any of the top 10 customers might have a severe impact on financial performance of the company. Looking at the competition, some of the key competitors are as follows in domestic market, that is, Bharat Forge, Endurance Technology, Mahindra CI, Bosch, and Motherson Sumi. It also has global auto ancillary peers which are Valeo, Hota Industria, Aptiv PLC, BorgWarner, etc. Now we will take a look at the financials of the company. Sales in 2016 stood at 365 crores, which is currently in the year 2021 March is standing at 767 crores. Operating profit jumped from 72 crore to 240 crore in 2021 of March. Similarly, in March 2016, net profit was at negative 16 crore, which then went on to become 188 crore in March 2021. The dividend payout was at 0% back then, which is currently in 577%, indicating strong financial throughout the last 5 years. Also, Sonacoms is likely to report strong 35.9% sales CAGR over the financial year 2021 to 2024 with the support from driveline as well as motor segment sales. The company is also expected to maintain its EBITDA margins in the range of 26% to 28% on the account of firm order outlook, robust order growth, and strong operating leverage. In terms of profit, the net profit of the company is expected to grow at a CAGR of 43.1% over financial year 2021 to 2024 to rupees 5.4 billion in financial year 2023 and rupees 6.7 billion in financial year 2024 respectively. Looking at the shareholding patterns of the company, we understand that promoters hold 67.30% of the company. FIIs hold 13.89%. Out of this, 3.31% is owned by Government of Singapore. DIIs own 15.16%. Out of that, SBI Large and Mid-Cap Fund owns 3.45%, Axis owns 2.83%, Aditya Birla Trustee owns 1.49%, and so on. Is the valuation in the company justifiable? We'll take a look at it. Sonacoms has a presence into auto industry which is witnessing a historical transition from internal combustion vehicles to electric vehicles. Those auto ancillaries who have product profile matching with EV requirement are going to benefit immensely. The company's products are completely aligned to EV and hybrid vehicles, and hence it is well established itself to benefit from huge business opportunity in coming years. Over the next 3 to 5 years, Sonacoms is going to witness rapid growth on account of ramp up in its cumulative awarded 58 programs, out of which 64% of programs to commence production over the next 18 months. At the same time, the company is planning to introduce traction motors, which is further going to amplify business opportunity in the EV space. It is expected that the company has the potential to grow its EV and hybrid portfolio by 25% over the next 5 years. Sonacoms has a reputed client credentials with highly profitable self-funded business model with which warrants premium valuations. Although Sonacoms trade at a significant premium to international peers, we believe premium valuation is justified on account of superior operating profit margin, strong balance sheet, and healthy return ratios. Now we will try to understand how the stock is behaving in the charts. This is for your knowledge purpose. That is the reason we are providing this to you. If you look here, you will understand that Sonacom has been in the channel for a really long time. That is in this particular area, and you'll see that it has been making higher highs and higher lows throughout, indicating that it is in an uptrend. Also recently it broke out from this level, and if you look closely now, you'll see that it is in a consolidation phase. Also there has been an inside candle that was formed near to the one that was formed recently, indicating that the bullish momentum is intact and you can use this opportunity to take entries. Now the stock may go up from here directly without coming for a retest to this zone. If not, if it is able to break this candle either to the top or to the bottom, according to that it will behave. That is, if this candle is broken towards the top, it will go up right away. If not, it will come for a retest to this zone and then moves ahead. That is all the information I have here for you from the charts. But then again, as an investor, you are not required to depend on the chart, but rather than the fundamentals and forward-looking mentality. That is all from us. I hope you liked this video. Please leave a thumbs up, share it with your friends, subscribe and leave a comment if you have any feedback for us. Thank you all. Take care. Bye bye.